everybody, Ben Nelson here. Hope you are ready for another episode of the Everyday Real Estate Investor. Thanks so much for tuning in again. I appreciate the support, and hopefully everything that you're hearing on here is inspiring and helpful. And again, just really want to inspire people to go out and take action and not sit on the sidelines, and just understand that we're all busy. We all have things going on. But let's not use that as an excuse. We talk to people that are out there doing the thing and making it happen, and not using life circumstances and the challenges we face or the excuses we have in our head as an excuse to not go out there and do what you want to be doing and get involved in real estate and live your dreams. So I hope you're getting out there to do that, and I hope you're finding some strength and some encouragement in what you're hearing on here. So that's what we're all about. So today we're going to talk about those challenges. But before we get into that, I did want to say real quick, and I mentioned this on prior episodes, I'm a real estate broker. I'm a real estate investor. Again, I'm involved in the real estate business on a day-to-day basis. So a little bit different than maybe someone that has a W-2 job, but I definitely understand being busy and being taken away from your real estate investing activity by doing other things and having other obligations. I have my clients, I have my family, I have lots of things going on, and I still need to find time for my investing. So I totally get it. But on the brokerage side, my colleague and I, Anita, we're growing. We're doing a lot more with multifamily and commercial properties, and we need help. We need help. We need some awesome people that are looking to either they're currently you're an active agent and you're looking for a change, looking for something different, looking for a place that can maybe push you a little bit to grow into some areas, provide some more opportunities that maybe you haven't had at your current brokerage. Or if you're, hey, I want to get involved in real estate, I want to invest, but I also want to do some sales to give me some capital to do some more investing or to provide and pay my bills, and then I can do my investing alongside that. We love teaching. We love helping people grow their business. We want people on our team that are abundance minded and that are ready to take things on and take on the challenges that we're heading into in our market, and be willing to solve problems for people and be compensated for it. So if you are looking for a new opportunity that involves you maybe being a real estate broker, having your license, again, we're based here in the Portland, Oregon metro area. Absolutely want to add some people here locally, but we're 100% open to, we're able to grow our team across the country. So if you're in another market, you like what you hear here on this podcast and what we're doing, would love to chat with you regardless of where you are in the country, and help mentor you and add you to the team. So we're looking to grow. We're looking to add awesome people. So if you want to interview to join the team, I'd love to chat with you about that. Okay, let's get into the content today after that. Let's talk today. We're going to talk about challenges and then the subsequent opportunities that are in today's real estate market, and maybe they're moving forward. So we're going to dive right into three different things that are challenges in today's market, and what does that flip side of that look like in an opportunity. So the first one, which we talked about on the last episode, was is interest rates, right? Interest rates are a lot higher than they have been in the recent past, and so it's just been the shock to the system of these interest rates that are really historically are not that out of line, but they just change so quickly, and we were not ready for it. The market was not ready for it. They probably should be where they're at right now. It needed to happen over a longer period of time versus just kind of ramping that up so quickly. But they let inflation get out of control a little bit. So not to get into the nitty gritty of all that stuff, but they're having to overcompensate a little bit because they waited so long to do it. That's my opinion anyway. So rates are the highest they've been in a long time. I think since 2008 or 2007. So I should have looked that up before I did this one, but it's 15 years since they've been where they're at. So this is a huge change, right? the great side, so there's a lot of actually opportunities that this creates. So the challenge is interest rates are high. It's really easy. Yeah, again, I did a whole episode on it last week of that alone being an excuse to not move forward and invest, because you could easily say, well, interest rates are too high, prices are going to start coming down because of that. Not saying that that's a right or wrong conclusion, but you can make that argument, and then hey, it doesn't pencil now because rates, money is more expensive, my debt is more expensive, I can't make the income on the property work, and you can just stop there and just leave that. I'm not going to invest because of interest rates. Man, I love, because what I love is that it does do that to some people, and I feel that maybe came out a little wrong, right? But because I want people to succeed and I want people to do well, but it does in reality take competition out of the market, because there are people putting themselves on the sideline. Now, I don't want the people that are listening to this, I don't want that to be you. Okay, so let's figure out a way to still make investing work even in the current market, because there's always opportunity to make money no matter what the market is doing, no matter what interest rates are doing. People always make money because they change their strategy, and they change their underwriting, and they change their approach. They don't just stop investing. So that's the first, again, mindset thing. And again, I don't want to regurgitate basically what I went through on the last episode, but just to kind of get your mind back around that. What the opportunity it does create is, you got less competition, right? You got those people that are putting themselves on the sideline because it's not the right time to buy now, right? You have an opportunity now where those buyers have put themselves on the sideline. And so now there's less competition, right? Now there's less competition, but when before it was just insane. Like, you had to, if you wanted a property, you had to overbid, you had to pay over appraisal, you had to, almost be paying cash. If you were trying to finance, you were at the bottom of the stack no matter what your offer was, and forget about a contingency. Are you kidding me? Like, why are you even writing the offer, right? So now it's a little bit more. Now, I will say, this is definitely a general statement, because we do have some clients that we're working with that we have on a couple properties we still had competition. So I mean, it's not like there's no competition. There's still investors and there's still buyers looking for property, but it's not what it was 6 or 8 months ago in the year prior. But in general, it does give you more opportunity to look at a deal and underwrite a deal and actually figured out if this deal is going to work for you versus just having to jump on it so quickly, right? It also gives you a really good opportunity to be more creative. And everyone's just been purchasing conventionally because it was easy. The money was cheap. In general, it was pretty simple to get a loan. There's tons of loan options. Interest rates are 3%, 3.5%. Why would you do anything different when they're giving you great long-term fixed interest rate financing? I mean, there's not really a reason to. Now is the test of what is in your tool belt. What are your other skill sets, and what are your other ways? Do you know how to deal structure? Do you know how to put creative financing together? Do you know how to put lease options and seller financing and options and creative financing and all of that? Do you know how to do that? Do you know how to have that conversation with a seller? And if you don't, this is something you got to start learning, because there's going to be more opportunities to do that as the numbers don't work with today's rates. Well, maybe there's a way that it can work, and the seller is willing to have that conversation, right? You didn't even have that chance to have that conversation before because they had people knocking down their door to buy the property. Well, now they don't, right? And so sellers are maybe a little bit more willing to listen, a little bit more willing to look at some other ways of selling their property and have that conversation with somebody. So you really have the ability to create the argument with a seller that buying at today's rates, maybe the price that they want doesn't work. So number one, here's another option. What if you're willing to finance? You can maybe get a better interest rate that way. Or you can use that as hey, it doesn't work at this price, but it can work at this price because, hey, the debt's more expensive, so I need the price to be lower. And then thinking down the road, at some point, rates coming back down again. I wouldn't count on it coming back down to, twos or three or low threes or anything like that. But probably at some point they're going to come back down again into maybe the 4.5, 5 range, and then you can refinance. So if it works, if you can make it work, and you can convince a seller that, hey, I really need to pay a little bit lower because my returns have to make sense with the debt, which is true, right? It does. You're buying an investment. And then if you can make it work with today's rates, then when you can refinance down the road, now it's gonna even be better for you. So there's just gonna be a lot more opportunities because people are gonna be willing to listen more. And yes, interest rates are higher, but there's more opportunity to have creative financing, more opportunity to have that discussion with the seller, more opportunity to kind of use that as a reasoning and a valid reasoning that you maybe can't pay the price that they want, but you can still buy it. You just have to, here's what that has to look like to be able to do it, and give them a couple options. Okay, challenge number 2, buying activity is down. No doubt about that. We just kind of touched on that here a little bit. I guess the challenge side of this is that if you're trying to resell, right, you're doing a rehab, you maybe we're turning around and selling it. Okay, I don't want to get stuck in a property. I'm doing some sort of value add or new construction or whatever. Buying activity is down. That's concerning to me, right? And there are a lot of buyers that are priced out of the market, and a lot of investors, again, that are maybe deciding to hold back and wait because of such a shock in interest rates and affordability and all that stuff. So again, we kind of touched on a lot of this stuff in the prior challenge. There's less competition. The opportunity is there's less competition. There's more ability to talk to a seller and create a deal versus just being one of 10 or 15 offers, and they had to just pick from the stack. And you could have been right in there with everybody else, but 8 other people were right at the same spot, and you still didn't get the deal. So sellers are becoming more negotiable and more willing to listen to opportunities and ideas. And they, there's stuff lingering on the market now because buying activity is down. So when you are selling, it's about, you got to price it right. You got to you can't be overly aggressive with your list price. There are still things, flying off the market really pretty quick, depending on what it is. It's definitely not everything, but they're for the right property priced right. They are still selling very, very quickly. So, I'm being honest, challenge 1 and challenge 2 are kind of pretty similar. But interest rates, buying activity, because interest rates are up, that slowed down buyer activity, and the opportunity, the benefit of that, the flip side of that is pretty relatively similar in those two. But just know that there's going to be a lot more opportunity to talk to sellers. So brush up on those negotiation skills, brush up on your tool set and how to structure deals, and create win-win opportunities, right? That's what it's all about, is creating an opportunity, a solution. Hey, your property's not selling. Here's an opportunity. I can buy it this way from you, but this is how it would have to be to work. Does that get you where you're going, right? So you're creating a solution for someone that works for you in this market, and that still gets the seller where they're going and creates that solution for them and sells the property for them. So okay, challenge number 3, housing inventory. So this is a challenge in a number of different ways because so inventory is it is higher right now than, so again, I talk on my market update videos all the time about year-to-date numbers and how they're super deceiving when you have such a big swing in the market because housing inventory is way up compared to what it was a year ago. Sales are way down compared to what they were a year ago, but they're really not that bad when you look historically at what is normal. So you can't just look at one year versus the other when one year was just insane and then just say, oh my gosh, look at where the market's at. We're down 25, 30% and with our home sales, and our inventory is up 50% or 60%. Some markets more than that. Well, okay, but we're still like 40% less or something like that overall housing on the market than what we had prior to when it got crazy in 2020, and this inventory just tanked because homes were just getting bought up so quickly, right? So we're yes, it's higher than it was, but it's still low, and we still have a very real problem with housing. Again, this is macro level. So you have to look at your individual market. There's that caveat that I put out there every time, right? A lot of markets are very short on inventory still. We still need more housing. And at the same time, we have builders that are a little bit gun shy. They're starting to pull back on production. Their confidence is moving down on the builder confidence index every month. So they're a little they remember the financial crisis, and it hurt, and they don't want to go through that again. So they're being very cautious. And they're pulling back a little bit on production. They're going to be slower to bring homes to the market. They're going to hold on to some of their cash. They're not going to sling them up like they have been the last few years. So you have already low inventory. You have builders pulling back, and now you also have people that are going to be stuck, more or less, because they're either going to be stuck because of a mindset, because they just are not willing to pay a higher interest rate, or they think the market's going to crash or whatever, some sort of mindset issue, or they're going to be stuck from an affordability perspective because how many people bought or refinanced in the last 10 years with the idea that, hey, I'm going to downsize, or I'm going to move up, but right now this is good and I can lock in this low rate. Well, now they're, at 3% and interest rates are at 7%. What do you do? I mean, who's going to want to trade that 3% interest rate? Go pay, the prices haven't changed. I mean, at least not in the Portland metro area. They've pulled back a little bit in some markets, but they're definitely not crashing. Even ones that have pulled back, they haven't pulled back by a large amount. So, you're essentially paying the same price that you maybe refinanced a year ago. And now you got to pay an interest rate that's way higher. Your monthly expenses, you don't even qualify for that, right? So, but even if you do, your monthly expenses is quite a bit higher, and they may not be willing to do that. So you've got all of these homeowners that have bought or refinanced, and there would be sellers if interest rates were still in that same range. But now they're not, right? And so now you've got builders pulling back. You've got people that are hesitant or unwilling to come to the market when we're in an environment of needing more housing. And so what is that going to do? What is the opportunity there? Well, if you buy now, you get in the market now, you're not shy about getting in the market, then the opportunity is going to be when the rates come back down, when people get used to where they're at, the floodgates are going to open back up again, and people are going to be it's that pent up demand. The demand is there. It's just an affordability issue at the moment, and so as soon as that gets its way worked out, however that looks, whether it's lower interest rates again or people just realizing that that's where the market is now with interest rates, or inflation making its way into wages more, there's a lot of ways that can work itself out. But the bottom line is that the pent up demand is there. It just needs to be released again, and as soon as it can be, it will be. And what is that going to mean? It is going to mean price growth again. We're going to see more appreciation, and you can time it, and you can get in now, and you can set yourself up for that next wave of appreciation. Now that's my prediction. That's what I see. Obviously I could be wrong. And again, every market's going to react a little bit differently, so make sure you're looking at what your local market is doing. But that's overall what I see happening is there's too much demand. We're too short on housing. I think this is a short-term thing, and I think the floodgates are going to open back up, and we're going to be off and running again. Now, is that 6 months from now? Is that a year from now? Is it 2 years from now? That I can't say, but I see it happening. So I want to leave you guys with this thought here, that for every challenge there is an opportunity on the other side. If you stop at the challenge, if you stop and say, this is the hurdle, I have this hurdle, I can't get over it, you throw up your hands, throw in the towel, and you just leave it at that, you're missing the opportunity that's within that challenge. And I want to challenge you guys to look at those things that are, in your way of success, or appearing to be in your way of success. And instead of just stopping and looking at what's in your way, look at what opportunity is there in this? What solution can I provide to this problem? How can I create something that is going to be a benefit from this situation that appears to be negative? And entrepreneurs we're compensated for solving problems. The value we bring to the market most of the time is that we can solve problems that other people just see as a problem, as a challenge that can't be overcome. And so you get compensated for solving that problem. And the bigger the problem, the bigger the challenge, the more you're going to get compensated. So challenges are not a bad thing. If you're an entrepreneur, challenges are a great thing because they provide an opportunity to be of service to others and to help them provide a solution for them that gives them value and that gets them where they're going, and you get compensated for solving big problems, big challenges. So get your mindset right with this. This no matter what the market does from here, there's opportunity in it. Whatever the market does from here, what you do with it and the attitude and mindset that you have behind it, that's what's going to determine whether you're successful or not, no matter what the market's doing. The market can be doing really, really well, and if you have a poor mindset around it, you're not going to do well. And vice versa, the market could be not doing so well, but if you have a great mindset and, hey, I'm going to find the opportunity in this market and I'm going to go out and create value and bring value to others and solve problems, you're going to do fantastic and you're going to be successful. So that's what I want to leave you guys with. Solve those big challenges, seek out those big challenges. Don't be afraid of those challenges, whether they're in your own life or in your real estate investing or in the market. They're good. They build character. They help you overcome, and they create opportunity for you to go serve and make yourself a successful entrepreneur. So thanks again for listening. Appreciate you guys. Reach out if you want to connect. I am available to do so, and I wish you guys all the best in your real estate investing endeavors. Make it a great day. Thanks again for listening.